So today is the fourth session. As of now, market is 90 point approximately down. And today we have scheduled for pair trade. So the pair trade concepts, how you can trade. So today is the fourth session, 16th September. So how to trade using the Z score method, how to do pair trade in beta decoupling and 1SD method. These three things we will be discussing today. 1SD I have already taken multiple times, and last month we had six sessions. All six sessions I have taken the 1SD method. Out of six sessions, five sessions we got excellent success. This time also, month of September, I have taken multiple sessions. There also couple of times I have shown that 1SD. So first we'll start with the 1SD, and here the 1SD calculation says that 17,830 above we should buy Nifty future, and 17,780 below we should sell Nifty future, and currently Nifty future is at 17,780. So it is at a sell entry level. Sell entry level. So today, now once we are analyzing, this 17,780 level is a sell entry level. If you are selling the Nifty future now, so what will be your hedging? Which option you should hedge? Now you are selling the Nifty future. Anybody can tell me which option I should hedge along with the Nifty future sell? 17,780. If I am selling the Nifty future, the simplest hedging you can write some options and all, that is different. So we can hedge it with the 17,800 call option purchase. So once we are selling the future, we should buy a call option. 17,800 call option we should buy, and if the trade goes against us, we will be keeping the stop loss at 17,845. So once it comes to 17,845, we have to close the trade and enter into the buying side. So currently what we will be doing, selling the Nifty future, along with that 17,800 call option purchase, call option buy. So this is hedging the future along with a call option purchase. You can think of selling some options also. Suppose if you are selling here the future, instead of that you can 17,650 put option also you can sell. So you can do either way. You can buy or sell. So both. So buy the options, or you can also sell the options. So that is also possible. So fine. So this is what we have entered. Now we'll be moving to pair trade. Pair trade, now fantastic opportunities you will get. Z score based pair trade. So here Z score based, I will not be going to the calculation. I will be going to directly to the Z score. So here with Nifty is independent, and any stock including Bank Nifty stock, everything is dependent. So since Nifty is having a independent view, why the Nifty is not a sectoral index, Nifty consisting of everything. So whenever plus 2 Z score by the dependent, means against Nifty whoever will be there, that we have to buy. So and sell the independent. Minus 2 buy independent, sell dependent. So we'll go for the Z score. So here we have a volatility scanner. Once we click here, start the scan. So the scan is going on. So once this scan is over, so we'll be getting to know about the Bank Nifty. Here you can see all these stocks are having that correlation, Z score, everything you are seeing here. So Z score here 1 plus 2 is coming. So similar way, many things will be there. Minus 2 here also it is coming. So plus 2, minus 2, all these numbers you are getting. So we'll be hunting for the Bank Nifty. So bank nifty, yeah, we have to, bank nifty is in the falling volatility territory, negative z score, negative z score. So negative z score, have a look here, and 61% correlation also satisfies that. So volatility, so 14.3 to 2.03 is the z score negative. Negative z score means buy the independent, sell the dependent. What is independent here? Independent is nifty. As I said to you, all these z scores we have derived by taking nifty as independent, and all these stocks whatever you are getting, it is are dependent. So by the independent, nifty should be bought, bank nifty should be sold. So it is a excellent z score 2 above. So here you must hedge it also. So here if I just select, double click on the symbol, I will get the latest z score. As per the current price, what is the z score? You can just see, as per the yesterday's closing it was -2, now it is 1.70. So 1.70, but still we can, you can enter. So here what we have to do, we have to sell the nifty, sell the nifty, sorry, sell the bank nifty at 41,200 level, and buy the nifty at 17,800. If possible, you can hedge both the trades, you can hedge both the trades, nothing wrong in that. So if you hedge both the trades, you will be having lesser you can say margin, and hardly it will take some 1 to 1.5 lakhs margin. Without hedging it will take some 4.5 lakhs margin. So you can buy the nifty 17,800, preferably you hedge it with the 17,800 put, and same time you can sell bank nifty along with the 41,200 call option purchase. So this is for pair trade. So you may say that now you told me to sell the nifty and now you are telling buy the nifty. So thing is that whenever I told you to sell the nifty, it is for intraday purpose. Now we are discussing on z score based pair trade, and it is a positional trade. Positional how many days? Maximum 10 days. Maximum 10 days. So positional trade of the nifty, maximum 10 days. And what we have to do? We have to, as per the z score, we have to, independent is nifty, negative is the z score. Z score negative 1.7 now. Till yesterday it was 2. So what we have to do? As per the z score, negative z score, nifty will be bought, bank nifty will be sold. So it comes to the lot size, one is 50, another is 25. So you make sure that both should be equal value. If it is not happening also, nothing to worry. If you are hedging it, hedge it and just continue with the trade. So you have to, what you have to do, buy the nifty, sell the bank nifty, each one lot, hedge it with the options. So it is for positional, but for intraday, for today, as per the 1 HD method, we have been recommending to sell nifty. So today it is for intraday, nifty can be sold. But you can say that if I am doing both, if you have only one trading account and doing both intraday as well as pair trade, then you can't do it. You can't do this, because you cannot have both the things, both the things in that. So you may think that can I go for the next month contract? Next month contract is value is different, because you can say October contract will be value will be different, October nifty will be different. So there also you can say the contracts will vary. So if you go for, instead of, you can say intraday I can have in the September month, if I can go for the October month, you can do it, So here you can see October it is trading 300, it is at a premium. So October series also you can enter, you can hedge it with the September contract, but the October contract, so since it is conflicting with the intraday, you can go with the October here also it is in premium, both are in premium. So equal percentage premium most likely. So you can think of entering the pair trade in October series, but hedge it with the September options, and intraday purpose you can utilize the September readings. That also you can do, but this z score based system is for 10 days. So what are the other companies we can take here? You can say Infosys is +2. Infosys is plus to 70% correlation. What it suggests? Plus to Z score. Means what we should do? Here Nifty is always independent. Independent, all are dependent. So for Infosys, can anyone will suggest me what to do? For Infosys, using the Z score based pair trade system, this Z score is to 70% correlation, everything satisfies perfectly. 60 above correlation, it is satisfying perfectly. Buying Infosys, selling Nifty. So we can do it buying the Infosys, selling the Nifty. So when we should close this trade and what will be the stop loss? Both the things will be always a common question by many traders. When you do with a pair trade, so it is a pair trade, so stop loss comes into picture when you do not hedge a trade. When you do only the speculative trade, there only stop loss plays a role. So what the pair trade traders has to do, suppose you have initiated bank nifty and nifty trade, bank nifty sell and nifty buy, so you need to check this Z score always. So once you are coming into the, now I can say till yesterday it was 2.03. Now it has come down to, just now we have checked it, double clicking on this, we are getting it as 1.73. Just few seconds before it was 1.70, now 1.73. So you can say once this Z score negative goes to 0 or positive say 1.5 or positive 1, you will get an excellent profit. So keep checking this Z score, not every 5 minute frequency. So hourly once, 2 hourly once, or day end once. So it is a positional trade for the 10 days period you are going to initiate. So once you are once in a once in 1.5 hour, 2 hour, those who are having this software, or once in a day end, just check it, and once it is coming to a level of 0 or positive, you should come out. Or else say it can go to the negative also, so you can say negative -2 you enter, and trade is against you, though both are hedged. So negative it is going to -3, negative it is going to 4. Where sometimes I have seen also this Z score going to, for bank nifty and nifty, going to -6 also. Say every time it double up, so you can say 2 to 4. So you are having a hedging component, you have hedged the nifty, you hedge the bank nifty. Each time it double up, your hedging component only you book the profit. The calls and puts, because trade will be going against you. So the bank nifty you have sold, it will be rising. Nifty you have bought, it will be falling. In that kind of situation, if it is doubling up, then what you have to do, you have to book the profit in the hedging component, only hedging component, and keep that trade. So this process you will be continuing till it is not favorable to you. And mostly once these two indices, there is not much failure. So when it goes with the stocks, I found out that there is a degree of failure till 25% of trades used to fail. Out of 100, 25 trades used to fail. Means 75% it is successful. So now, for specifically for the indices, it is rate of failure is very less. Means you can say less than 10%. Less than 10%. So or option strategy traders, what is they are named as? They are named as the most matured traders. Those traders make wonderful money, wonderful profit they earn. So they are the traders who will make real money from the market. So here Nifty we have done, and have a look here. So 80, what will be our first target for the Nifty as per the 1SD method? Intraday. Intraday. Can anyone will tell me? This same screen is visible here. What will be our first target? Level 742, 723 is being penetrated. It will be as a bigger targets it can give. So pair trading is nothing but you are, it is a advanced version of a hedged trade, advanced version of the hedged trade, wherein we can say that pair trading is, or option strategic trading, are the advanced versions of the hedging trades. So here you are taking two counter positions. So you tell me, in the Z score based things, I told you to sell bank nifty and buy nifty based on a Z score, based on Z score. Why so? Why can't alter? What way this? What way this? Uh, so uh, so this particular trade is what way it is going to be more, you can say, why it is being recommended. So what way it is going to give the benefits. So here there are two aspects involved in the Z score. First, the normalization of the data. So bank nifty is a different entity, nifty is a different entity. We are normalizing the data, then grouping the data into the average spread and finding out the correlation as well as the 10th day standard deviations with the Z score. So this particular value says that how much extra, very carefully listen to this, when I say Z score is suggesting you to buy bank, sell bank nifty and buy nifty, in other words it says how much extra accumulation has happened in the bank nifty which with respect to nifty. So with respect to the nifty, how much the extra value it has been added to it. So how much extra values are being added into this thing? So that is why Z score works. Z score works. Z score or beta decoupling works on that concept. It gives you. So whenever now Nifty is going up, falling down, Bank Nifty is going up. So when that a distribution will start or when this accumulation curve will end, so that has no one has the idea, but mathematically it is possible to know when the distribution will start and when the accumulation will end. So now target has come, first target 17,740 has come, first target achieved in the Nifty. If you are enter the trade at 17,780, Nifty sell along with the hedge is the perfect time to book the profit. Or you can trail the stop loss and wait for the second target. And but pair trade you have, it is a 10 days position, you need to wait for that. So fine. So this is about our first system of pair trading, which is Z score. One more method of pair trading also we have developed in Smart Finance. So that is my own method. Z score is a existing method. It was there. So I have just grouped it and brought it. Z score based system was present much before my method. So this method was my sole innovation, Smart Finance innovation, my innovation. So this method I have come in the year of 2008, 7 and 8. So this is the method. Now few lakhs traders used to follow this, and it is a excellent method. Beta decoupling. So beta decoupling means the beta is one of the part that it says that if one is moving by 1%, how much the other one will move. If I say ICICI Bank and HDFC Bank, both are in the private banking space. If ICICI move up by 1%, how much percentage the HDFC will move? So that is called your beta, classical definition of beta. So that is a mathematical part, classical part. It will obey. It is a mathematically you are telling why should HDFC should obey that mathematical parameter. So every day HDFC will be deviating something, not following this mathematical parameter. So once it group together and every day some decoupling will be happening based on based on the beta value. Once this decoupling crosses 2, like your Z score crosses 2, that time it provides you a opportunity to trade. So this method also a very successful method. And and believe me, those who are doing the trade as per the beta decoupling and Z score, they do not think about option strategy. They do not think about any other mode of trading. They made excellent money out of this trade. So if I say that ICICI, HDFC and Axis, You can see here we have given a clear analysis here. Out of beta decoupling is suggesting buying Axis, selling ICICI. Trenner ratio, Sharpe ratio, Jensen's alpha, correlation we have taken the spread. So out of 5 studies, 4 studies are telling buy Axis and 4 studies are telling to sell ICICI. So one study is only deviating. So 4 majority is there. So here buying Axis Bank, this gives you the exact recommendation. Buy Axis Bank in this and sell ICICI Bank in this. Trade recommended without option hedging, because here correlation suggests that even though if you do not hedge this position, it is well appreciable. So you can say now contract value you have to it, or SEBI will not agree. So what we have to do? Contract value 20 multiple of or 25 multiple of Bank Nifty and 50 multiple of Nifty. Both contract values should be same. If they are not same, what we have to do? We have to increase the lot size, decrease the lot size, bring it to the same level. So that is how we have to make it equal. So how much worth we contract we are buying? Say we are buying 5 lakhs worth of Nifty. Same 5 lakhs or near to 5 lakhs we can make it. 10% to 15% deviation is acceptable. So you cannot make it exactly equal if the contract value is 10 to 15% difference. So one is 5 lakhs, another is 4 lakhs 50,000. It is acceptable. One is 10 lakhs, other one is 9 lakhs 80,000 or 9 lakh 50,000. It is acceptable. So fine. So contract values we have to keep it equal. Same thing for the beta decoupling also. So beta decoupling here we analyzed 3 pairs: ICICI, HDFC, Axis. First pair is being formed, Axis and ICICI. Majority view is buy Axis, sell ICICI. Second, Axis and HDFC. Here goes split view. So this we can avoid Axis and HDFC Bank. Then we go for the ICICI and HDFC. Here also 4 is to 1. So this we can accept. This we can accept. Suppose if we want to do for some tech stocks like Infosys, like TCS, and we can go for HCL Tech. So these 3 stocks also tech stocks. So tech stocks load and analyze. So you can get the data, download it, and the data once it will fetch and it will analyze. See, fantastic thing is coming. TCS buy, Infosys sell. All views are there, but hedging is recommended with option hedging. Correlation is telling how to hedge. So entire description here. So those who are having the software, if you just read these 4 lines of description, this says how to enter the trade and how to exit the trade. These 5 line of text. So it makes your trades activities very simple. So here too also we have Infosys and HCL Tech. This also excellent pair. Now TCS and HCL Tech, this also a excellent pair. So you can do any kind of pair trade here. But here intraday also you can able to do. But intraday beta decoupling expanding or contracting on based on that view you can do. That opportunity comes very rarely. Here you can say Infosys trade is not recommended. Intraday there is no opportunities here. In these 3 pairs, we do not have any opportunity in the intraday. So this particular pair trade system is a matured system. Traders, those who follow this, they are considered as the matured traders or experienced traders. It is not for the beginners. So beginners cannot digest this kind of trades, because these 5 beginners cannot digest. Whom we should say as a experienced trader and whom we should say they are not experienced traders? Any definition? Or it is simply anybody is 5 years in experience, 5 years in that experience, that we can say they are experienced traders, or anybody who is having you can say so whom we can say as an experienced trader? Only based on their age, how many years they have been trading or anything. So here we can say, when I say experienced traders, traders those who follow the those who follow the concepts or specific methods consistently. Trader those who have make it as a professional activities. Traders those who are casual, do only for or do not follow anything. Who are the casual traders? Those who do not listen to any technical studies, do not follow any technical studies. They go by the they go by the simple TV talks, or they go by some kind of, you can say, uh, only they can follow specific TV commentaries, and or you can say they hear from friends, and they hear from the friends, and uh, you can say always their trade activities is depend on some TV commentary, friends opinions, and other things. They do not follow any kind of scientific studies into it. So those traders, you can say, they do not hedge. Hedging is allergic to them. So if you ask why can't you hedge, they justify that no, it is not necessary to hedge, or they say that a trade is a gamble. You can say many forums they used to speak about what, most of the forums if you go by, so they are speaking about the only they talk about the you can say they say this thing that this is market is moved by only the operators. You can say many forums you can go, they will say that it is by the operators are doing everything. So operators are not doing anything here. So those who are very feeble traders, they used to say that they will be always saying that no, market is not a scientific game. But those who are mature traders, they will say market is a scientific game. It is a rational game. It goes by specific logics, move by specific logic. So those traders can only benefit from higher concept. So those who are not having time, or they cannot able to digest that subjects, so they have to follow specific tools or softwares to make their processes easy, and they need to follow many things very judiciously, or very you can say strongly. They have to follow specific scientific readings. So you can say 1SD or Elliott studies, natural constant studies, they qualify to be that. So here today, so you can see the top and bottom. We have already shown you the top and bottom. So what is happening here? One bottom is now, if 17,740, we have seen one target. 17,740 was a target. 48 was one bottom. First bottom is broken, means what I have told you in earlier session. Can anyone will tell me? First top or first bottom is broken means what will happen? Session I have told, any day the first bottom is broken, first top is taken up, then that day third and fifth bottom is possible, or third and fifth top is possible. So today, if it is falling to 17,500 level also, you should not get surprised, because these are the bottom. 512 is the bottom, third and fifth can be considered as a bottom. From there only the bounce is possible. So for that, what happens if you have a sell trade? What you have to do? Hurriedly, you should not book the profit. Rather, trail the stop loss, hedge it doubly or anything, and keep holding that trade for higher targets or for bigger profits. So that is how this particular intraday top and bottom helps you. And monthly top and bottom, anybody has seen that monthly top and bottom, nifty top and bottom? So we have discussed in the previous session, and we have a top is being formed. I told that the top is being forming. So from where we had a retracement, can anyone will tell me? Out of this top, from where we have had a raise, this we have shown you in the beginning part, from here it had a retracement, few points from you can say up or down it has gone, but it had a retracement from here. What I have told you, 2.618 is very high. 2 or 2.618, this is the most critical point. It has to cross, then only it can make a new heights or higher, but top and bottoms are possible. So here now it has a retracement from here, so where it should go. So now you can say this two level also it has broken. Now what you have to see, 1.236 is not that important. So if there is a bounce is coming, the bounce will come near to 17,344 level. From here only one bounce is expected. So this monthly top and bottom also very, very important. So have a look at this. So monthly top and bottom is a excellent concept you can utilize. If you have a trade and if you have a long-term vision in the trade, you can see that you should follow that monthly top and bottom. You should follow the weekly with the intraday top and bottom. So these are the very, very valid concepts, mathematical concepts. Month before you are knowing that, oh, from where it is going to where it is going to where it is going to have a retracement. So month before, not so. Yes, you have to take for the trailing level, Saurabhji. Once tell me monthly top and bottom, it's a fantastic opportunity to learn also. Monthly top and bottom it has formed now. So now if I tell you when you can for a longer term view or for monthly view, if you want to buy Nifty, what is the best level to buy the Nifty? With hedging, not pair trade, nothing. So now this is the top is being formed. So it is now having a retracements. So you can say, can anyone will tell me what will be the best level I should buy the Nifty based on these studies? So 1.618 is the 5 level, 17,344 is the level you can think of buying. But one thing you have to remember, so here I am telling that you should buy because it is a top retracement. We have not created bottom here. We are now from a top, we are retracing. From top, we are falling. We are not creating any bottom here. These are not bottoms. This is a reversal happening for the top. So here you can say 344 level. 1.618 is a very strong level you can follow, or you can compare between your first bottom, which is 295. 344 you bought, but wait for which level. If it is 295 broken or 200 broken, then you can say that these are the bottom. You can go with a hedging always. Go with a hedging. 344 level you can buy, hedge it with the 350 put option, and each time it moves to, say, first bottom is not that important. If it is going to 17,200, book profit in your hedging component. Next bottom 106, so book profit in your hedging component. So most likely 1.618 and or 2 to 2.618, not 1.618. So these two levels are very important. 16,700 to 16. So this level 16,600, 700 level. From here one bounce will come. So keep hedging. Each time one bottom is made, go on booking the profit in the hedging component. Keep your original trade intact. When there is a again escalation or bounce happens, you will make a wonderful profit. So this is, but now buying is not advisable till 17,344. It is for monthly view, not for intraday view. So maybe 16 days of the month is gone, so you can go for the trailing 1 month and take some decisions. That is different, but this is how you should trade as per the monthly views. So those who do not have time for intraday or anything, they can go for a monthly trade based on this top and bottom. So based on top and bottom, you can always trade with a monthly view. So now third, you can say it has made a low of 665, and we have seen the intraday top and bottoms. Now intraday top and bottoms we have seen 665 it has come. So now third cycle 748 it has broken first first cycle bottom, it has been broken. So further selling will come. So it won't have a great up move now. So further selling you may expect now. So you need to wait. This is not the level to jump into buying. But however, if you are a pair trader, the different Z score was suggesting different. We have entered, and that is a different activities. So pair trade is an entirely different process. Success. So on screen success we got, or during the session within 10-15 minutes we got the success. So Z score based pair trade also we have entered. So that will be definitely a small amount of negative things will be there. So Z score is not now not moving in the, or you can say not coupling, it is still decoupling, so expanding. So that part also there. So anyone has any query, any further query, can ask me. All those courses what we offer, so that also explains all these things in detail. So GAN studies also you can able to do the trend change date calculations, Z score based system, beta decoupling based system, everything is explained in the courses you can go with. So only the software simplify your job. It fetch the data, error will be eliminated. So that is what it does. So if you are interested in any of the product, give a call to us in this number, above numbers, or you can visit the product section of the website. You will get all details. So if you have any query, you can feel free to call us in these numbers. Thank you very much. Thank you for your time. Again, we'll meet on Monday.